Ladies and gentlemen, boys and girls, and children of all ages, you're now tuned into the Investor Show. As always, this is your gracious host, the Prince of Investing, Prince Dykes, coming to you guys and girls live all the way from a beautiful city and state of Denver, Colorado. So don't forget to hit that like, subscribe, comment, and share button. If you're catching the playback, if you're catching the podcast experience, thank you for tuning in. And follow us on YouTube, iHeartRadio, iTunes, Google Play, however you can get a podcast, Pandora, YouTube, all of this stuff like that. And if you're catching this live, as you come in, you know what we're already going to do in the beginning. We're going to do a roll call. This is the time where we allow people that are coming in live, who catches this show live, and how do they want to interact. Tell me where you're from. Tell me what your name is. I love to see that. So at the 3-minute mark, we go through the roll call and we say hey to everybody that's catching us live, right? And we have a good time. So as you guys and girls can see, this is going to be a very great episode. We're going to talk about the 4 ways you can use option trading, option contracts, right? Give me 1 second here. Don't know what happened with that. Don't know what happened with that right there. But I'm making sure we're good to go. Looks like we're all good to go. All right. So, catching it live, tell me where you're from. We're going to do that at the 2-minute mark. We're going to be talking about 4 ways to use option contracts to profit during the earnings season. Ladies and gentlemen, we're in full swing of earnings season. We're going to talk about what option contracts are, how do they work, how do you can use them, how can they be used to your advantage, all that great stuff. So once we get to the 3-minute mark, we're going to acknowledge the people that are here live, and then we're going to get straight into our topic. So I like to see you guys and girls come in and all of the great stuff. So like always, guys, we're in full swing of earnings seasons, and we're going to talk about what earnings season is, what happens during earnings season, what does that mean, all of the great stuff, how can you profit, and I'm going to give you a little bit of what I'm planning on doing myself and why I'm going to do it and how it makes sense to me. So, of course, you know, guys and girls, the stock market is unpredictable, but I'm going to help you guys and girls add to you guys and girls' toolbox, right? Because it's all about having tools and knowing how to deploy them. What I started to get success in investing, the more things I learn, I'm like, ooh, I can do an option to execute this. Ooh, I can do this or do that. Or, ooh, I can use whatever the case may be. So many instruments that you can use. I want to add tools to your toolbox, and of course, I'm going to show you guys and girls how to fish. So we are now at the 3-minute mark. I want to tell everybody out there, I want to let's go through the people that are in here live at the moment. So we got BR Radio. Can't wait for this one. All right, BR Radio, thank you for tuning in. Right now we have okay, DG31 coming in from Dan from Long Island. What's going on, Dan? Harloon Financials. What's up, Prince? What's going on, Harloon Financials? Then we have good afternoon. Staten Island is in the house. Silver Lining, we know you from Staten Island. What's going on? Nice to see you there. Stephen Johnson. Okay, he's tagging somebody. Hello, I'm Tanya from Houston. I'm new to trading, and your channel has been very helpful. Thank you for all the great information. Thank you. Glad I can do something positive with my life. All right. We got Wayne coming in from Chesterfield, Virginia. Okay, cool. All right, so those are the people we got live. So now we're going to jump out to the roll call, ladies and gentlemen, and we're going to talk about what is going on right now. What is the hot thing that's going on? We're in the midst of what is called earnings season. Earnings season, ladies and gentlemen. We are in the midst of earnings season. What does earnings season mean? This is the time of the year where companies report their corporate earnings. So every quarter, companies have to report their earnings. So the first quarter was January, February, March. That was the first quarter of 2020. Now we're in April. All the companies, all publicly traded companies have to report, open up their books to what happened in the first quarter. What do they predict in the future? So the market moves a lot during the season. Stocks move a lot during the season because this is when we get an inside look as an investor to see what is, is Tesla really good as they say they are. It's Apple. Did Apple get hit as bad as did we think? Did it meet expectations? Did it beat expectations? All those things are big in earnings season. So this causes a lot of volatility of things moving across the market, all the other great stuff. So what's going to happen during earnings season? Let's take a look. Ladies and gentlemen, this is earnings season. This is provided by Earnings Whisper. You can get this chart off of their website. This is April 27th for the rest of the week. So you can see Monday, right? We already passed Monday, but tomorrow is Tuesday. Before the market opens up, we're going to have Southwest Airlines report their earnings. We're going to have 3M report their earnings. We're going to have UPS, Pfizer, Alphabet, which is Google's reporting their earnings this week. Tesla's reporting their earnings this week. Microsoft, Facebook, McDonald's. We got a plethora of companies, right? These are big. Amazon. So we got Amazon, Apple, Facebook, Microsoft, Twitter. I don't know why I said Twitter, but Alphabet, which is Google, AMD. These things shape the market. This is a nice little prediction here, right? I won't say a prediction, but this is a nice little chart to kind of show you what's going on throughout the week. So this is a busy week. A lot of big companies are going to be opening up their book. This is what we call earnings season, and it lasts for about a month. It kicked off around about April 15th, and it's going to last all the way until about May 15th. Very big. As you can see, ladies and gentlemen, we have a lot of great information that's going to be coming out this week. A lot of people are going to be opening up their books this week, so we got to be careful to see what is going on. All right? So that's what earnings season is. Before I get into the next topic, I want to go in here and see what you guys and girls got to say before we get into the next topic. All right. Mr. Lawman says, hello, everyone. Nice. Easy checking in from Sowena, Georgia. Okay. Make sure you, make sure you write that book, Easy. That was a great book that you mentioned one day on the live. Awesome book. I'm a veteran myself, 17 years, coming up on 17 years, and I'm looking to retire in about 3 years. So that's a great book you was talking about, Easy. Jerron, what's going on? Hello, Prince. What's going on, Jerron? Yarn, that's how you say his name. Hope I ain't butchering his name. Hope I ain't butchering your name. So first, let's get into it, ladies and gentlemen. We just spoke about this is earning season. What happens during earnings season? Corporations. We got Apple. We just looked at Apple, Microsoft, McDonald's, Southwest Airlines. All these big companies are opening up their books this week. Now we're going to talk about what are 4 ways you can profit utilizing options to benefit from this. The first option is a call option, right? What is a call option? You're calling it. You're saying, hey, Southwest Airlines is currently $29. I want the right to be able to buy Southwest Airlines in the future for $30, $35. And you know what? I'm going to open up my E-Trade here. So we're going to walk through this in real life. We're going to do like nobody else does this. You know, some people talk about it, but how many people are going to actually look at it and bring it up to you? So I'm pulling up my screen here that I'm going to share with you guys and girls as well. So I'm going to pull up my E-Trade, and we're going to look at the option chains, and we're going to talk exactly what an option is, right? So let me share my screen here. Maybe I sound like I'm too excited to talk about this. That's why I love the internet. The internet helps me find people around the globe who's just as weird as I am. So here you go, ladies and gentlemen. This is Southwest Airlines that's pulled up. So we pulled it up right up under here. We went to options. So right here, May 1st, right here on top, this is May 1st, May 8th, May 15th, May 22nd. So right here, we're going to look at May 1st. That's this Friday, it's May 1st. On the left side, you see this is the call side. Call. These are the people who are bullish, who are thinking the market is going to go up, right? This is the put side. These are the people who are betting the market is going to go, not the market, but this particular stock is going to go down. In the middle is the expiration date, right? So on May 1st, on the left side, you got calls. On the right side, you got puts. Now, when we go down here and look here, down the middle, you have the strike price. So let's say, for example, a call option, I say, give me the right to be able to buy Southwest Airlines for $30 by May 1st, right? I can do that. So right here you go, okay, this is May 1st. This is a $30 strike price. I want to call, I go over here. This is the last bid and ask. This is the bid and the ask, that's the spread. So it's saying 80 cents. Now, one option contract has 10 shares, 100 shares. So it's going to be $80. So for $80, I can buy the right to be able to buy Southwest Airlines in the future for $30. You guys and girls see that? Hope that makes sense. Why do people buy a call option? If I believe Southwest Airlines earnings are going to come out tomorrow morning or tomorrow afternoon, and I believe the stock is going to jump up to $35, right? I think the stock is going to jump up to $35, which does happen during earnings season, but I don't see Southwest doing that, but who knows? Let's say I believe Southwest Airlines is going to jump up to $35. So I go in here and I buy the right for $80. I can buy the right to be able to purchase 100 shares of Southwest Airlines for $30, right? So now this is what happens. Let's say tomorrow comes, Southwest Airlines shoots up to $35. There's two things you can do. You can now go to the market and buy those stocks for $30. You can buy stocks for $30 that are trading for $35, right? So you're going to make $5 per share. So you can look at that. That's $500 you can make, right? If my math is not mistaking me. But this is why people do this. Another thing why people, in earnings season, stocks move a lot. They jump up, they jump down. Now, the downside, what if Southwest Airlines drops down to $25 tomorrow? If it drops down to $25 tomorrow, you pretty much, this contract is going to be worthless. Because who wants to buy a stock for $30 that's trading for $25? Nobody, right? Hopefully nobody. So guess what? Your contract will be worthless. So now an option, why is it called an option? Because you have options. So if I buy this contract today for $80, let's say $80, and I have the right to be able to buy 100 shares of Southwest for $30, I have the option to, one, I can just sell the contract, take the profit. I can pay $80 today. Am I saying that right? Is it 80? Let me make sure. Let me do my math. Make sure I'm correct on this. I'll give me 1 second. Okay, it don't feel right. But okay, I can take the $80, invest it today, boom, buy it. Buy a call option. Tomorrow, let's say Southwest goes up to $35. Now, my value of my option is worth a lot of money. I can sell it to somebody else. I can sell that option to somebody else for, let's say, $300 or $200, right? Right there, I made over 100% return on investment. So boom, just like that, I made money. The other option I have is I can say, oh, Southwest Airline is now trading for $35. I got the right to be able to buy them for $30. Execute, exercise. You exercise the right. Now I pay $3,000. That's about $3,000. I'm gonna pay $3,000. I got 100 shares of Southwest Airlines, and I'm automatically up already. Why am I up? Because the market is trading them for $35. I got them for $30. So I have the option. I can let it expire worthless. I can do nothing. As it gets close to that date, the expiration date is going to expire worthless. I can let it expire worthless. I can sell that option for money, profit or loss, or I can exercise. Those are options I have with a call option. That's one way you can profit when the economy is not the economy, but when the stock market is going crazy or whatnot. So let me get into some of you guys and girls' questions while we're going through that. How y'all like my new? I decided to put a bookshelf. What y'all think about the bookshelf? So I had to change up a little bit, look a little bit more spiffy. All right. Okay. Sorry about that, y'all. Harlow Financial says, which companies are you mostly looking forward to? Southwest Airlines, guys and girls. I wanted to buy. I told y'all yesterday. Today I was planning on buying Apple. June 2021 expiration date. June 21. Apple Street 300 strike price. That was going for about $3,000. I just wanted to buy that, right? And okay, the market had a good day today, so that swells up the price. That makes it more expensive. So I want to see the market go back down. So I didn't buy it today. I didn't buy the option that I wanted to buy, but maybe another time. Right. So the one I'm looking forward to tomorrow, I'm definitely looking forward to Southwest. And we're going to get into that. Remind me that Harlow Financials. At the end, I'm going to tell you exactly why I'm looking forward to Southwest and what I plan on doing with Southwest. Jarn said, you had it correct the first time. I can't remember what I said correct the first time, Jarn. Yarn. Hopefully I didn't butcher your name again. I need to set up my thing where y'all can call in. I need to set it back up to where you guys and girls can call in. I can hear y'all voices. How do I get the info on those earnings? Website. Wayne says, how do we get info on earnings? He wants the website. So, ladies and gentlemen, I could sit here and tell you, but I'm going to show you guys and girls how to fish. Y'all ready to go fishing? Y'all ready to go fishing? Type in Prince, let's go fishing. So when I tell everybody to go fish, it comes from the biblical term. If you, hope I don't butcher this, but if you feed a person, if you give a, how does it go? Pretty much, no, give a man a fish, he eats for a day. Teach a man to fish, he eats for a lifetime. So I can sit here and just ramble along, oh yeah, get it from here, but I'm going to teach you how to go do this, Wayne. All right? So right here, let me go. Let me get my screen ready. I'm going to, Wayne asks, how do you find earnings? How do you know when earnings are going to come out? How do you know this, Prince? Are you a genius? Are you just smarter than everybody else? Y'all all know that's not true. Yahoo Finance. We can go to Yahoo Finance. Let's look up earnings calendar. So where's my screen? I'm going to share my Google. So y'all can see right here where I turn, right here on Google, I typed in Yahoo Finance earnings calendar. You can just type in earnings calendar and you can probably find some good ones, but right here, click on that. The first option comes up as my computer kind of loads here. It tells you, it comes to date, Monday, April 7th. They got all the companies that's going to release their earnings, right? You want to know what's coming out on tomorrow? They got all the companies that's going to release their earnings tomorrow. So they tell you all the companies. They tell you right here Tuesday. Alphabet. I didn't know Alphabet come out tomorrow. I thought it was tomorrow afternoon. It's probably tomorrow afternoon. Southwest Airlines. Some of them become, so right here, you come down here before the market opens up. After the market closed, Google is going to announce after the market closed. Oh man, Southwest is announcing before the market opened. That kind of sucks because I had some plans with Southwest because I got some reports that it was going to do it in the afternoon. I'm getting conflicting reports on when they're going to report. I know they're reporting tomorrow, but some people saying before the market opens up or after the market. So right here, ladies and gentlemen, you can see it. That's how you can fish on finding your own, finding the earnings reports. All right. Kevin, congratulations to Kevin, everybody. He won the Unstoppable Prosperity hardcover book by Charles Payne. I had that mailed out today. You should be getting it by the end of the week. Congratulations, Kevin. So Kevin says, can you choose a timeline of the option, for example, 1 week or 1 year? Yes. We're going to show you that again. So right here, let's take me for example. Let's type in Apple. I'm going to type in Apple. Apple went up 2 cents today. I should have brought that option anyway. I should have brought it, but whatever. So let's take it. Here we go, right? May. Let's say if you want to go out to next year. Right here. This is the expiration date of June 18th. June 18th of 2021. This is the expiration date. Right here, I can buy a call option or a put option. Let's say if I want the right to be able to buy Amazon. And let me tell you something, right? The blue, what y'all seeing here, that's considered in the money. The white is considered out of the money. In the money means that, let's say right now, Apple is trading for $283. So 280, that's already in the money. It hasn't gotten to 285, it hasn't gotten to 290, 295. Those things are considered out of the money. That hasn't happened yet. On the call side, things that are in the money are more expensive because they already kind of happened. So you're already buying some value with them already. Versus, who knows, Apple may not never get back to $300. I know better than that, right? It's just a matter of time when. Keep in mind, ladies and gentlemen, nobody is talking about if the market is returning. Everybody's talking about when. Corey Rogers, what's up? What's going on? What's going on? Y'all give me some thumbs up button. Y'all hit the like button, hit the subscribe button, all that good stuff. Kevin said he's a visual person. You said you need a whiteboard. Okay. I'm trying to think of, maybe I might do a different video for that to show visual. But I was trying to show you exactly how it looks on the platform. I might do something like that. I might do something like that. Okay. Gary Wallace, what's going on, Gary? Thank you for tuning in today. Wayne said, looks cool. Yeah, y'all like my bookshelf? I decided to change up a little bit. I got tired of Spider-Man jumping in the back of my city, so I decided to change up a little bit. Tony Bone said, looking like the pro you are, bro. Tony Bone from TDC. What's going on, Tony? All righty. I think he said, I like the bookshelf. Okay, cool. Nice. Okay, cool. Yeah, I got you. I got you, Yarn. Jacob, I said, if you give a person a fish to eat for a day. You're right. I was jacking that up for a second. I was jacking it up for a second, but yeah, if you give a person a fish to eat for a day, but if you feed a person, or if you teach a person a fish, you feed them for a lifetime. There you go. Appreciate that, Jacob. Thanks for looking out. Wayne said, thanks for the info. Now we're going to get into what's your take on Jim Simmons? I don't even know who that is. Not off the top of my head. I looked that up. Congratulations. Thank you. Do you think Netflix will go up or down tomorrow? Are they earnings due tomorrow too? I gotta look. We can take a look at that. Gary Wallace, if you are in the money at the end of your term, do e-brokers automatically? No. If you're in the money and you don't exercise your option, and you don't sell it, it'll just go away. It just think about it. Gary Wallace, as you get closer and closer to your expiration date, the Greek symbol theta, I'm not going to get deep into Greeks, but what happens is the closer you get to expiration date, the more value your contract loses. I'm going to show you guys how I play the game on the opposite side. So no. So let's say if you got a contract, I'm gonna give it to y'all simple. I don't want to even talk over y'all here. I'm gonna give it to y'all simple. Y'all ready for it? Here go options traded, and I guarantee you, anybody that's listening that don't know what I'm talking about, when I get done in 2 minutes, give me 2 minutes, you're gonna have a complete understanding of options. Hopefully, I don't butcher this. But here we go. This is a simple concept. Let's say if your job is raffling off a new Ford Focus, right? Let's say if your job is raffling off a Ford Focus, right? If your job is raffling off a Ford Focus and they hand out tickets, $100 to everybody, they got 100 tickets. The job raffle off 100 tickets, and the tickets cost $100 to win a Ford Focus. So I have a ticket. I buy a raffle ticket for $100 and a chance to win a Ford Focus. So I buy a ticket. All the tickets sell out. Now your job comes back and says, you know what? We had a good quarter. We're no longer going to give away a Ford Focus. We are going to give away a Lamborghini, right? Now, all your coworkers who didn't buy a ticket, I can now take my $100 ticket and sell it to a coworker for $500. Why? How did that happen? Because I brought it on the premises of a Ford Focus. Now they give away a Lamborghini. So you can see this is considered, my ticket is considered a derivative, right? The value is derived off of an underlying asset. The underlying asset is the car. So when it was a Ford Focus, I got a raffle ticket for $100. It doesn't give me anything. I don't guarantee to have nothing. I just got a derivative. Then your job comes in like, instead of giving away a Ford Focus, we're going to give away a Ford Focus. We're going to give away a Lamborghini. Now everybody's like, "Ooh, a Lamborghini." Now I can take my ticket, take it to somebody else that I bought $100 for, and sell it to somebody else for $300. Ladies and gentlemen, that's option trading. That's option trading. When you go out there and you buy that contract, when you buy that call option, all it's doing is giving you the right to buy something for a particular price in the future. That's it. It's a derivative. Now, for people who are from the inner city, who's urban, who grew up around gambling, or people from Vegas who grew up around gambling, it's like watching two guys gamble and you're placing side bets. That's what option trading is. You're watching somebody gamble, you're like, "Hey, I bet you he hit his number." But I bet you he don't hit his number. And you guys are placing side bets. That's all option trading is, right? The value of the option is dictated upon the movement of the underlying asset. Now, in that example, when I told you guys and girls, "Hey, this job was going to give us a Lamborghini," let's do it the opposite way. Say if your job said we're going to give away a 2024 Focus, and then they said, "Ah, man, we had a bad month. We're only going to give away a bicycle, but it's brand new though." Now your ticket just lost value because you brought it on the premise of a Ford Focus. You paid $100 for it. Now that Ford Focus is now a bicycle with a bell on it. Who are you going to sell that to? Nobody really going to want that. And the closer and closer of the day of raffle, that's the expiration date. Say we're raffling off this Friday. The closer and closer to the day of raffle, your raffle ticket is losing value. Why? Because a person becomes more desperate, right? The time decay, the theta starts to eat away at it, ladies and gentlemen. All right? Hope that makes sense. Let's go back into this. Hold on. Hopefully I explained that. Hopefully I didn't butcher that. We'll get into that one. Young Ma said, "I subscribed and liked." Thank you, thank you. Hello Financial, do you think Apple will be $1,000 in the next 5 years? Ooh, that's a tough one. That's a tough one. I've never seen Apple at $1,000. How long? I ain't smart enough to figure that out, but I'm smart enough to tell you I think it'll be over $300 in the next year. I'm not a smart guy. I'm just smart enough to know what I'm dumb at. Betting on Apple at $1,000? Probably not. Betting on Apple at $300? I'll take it. Marlene, how you doing? Marlene, hope I'm saying that right. Hello, everyone. This is my first time on your live stream instead of a replay. Thank you. Thank you for catching live. Thank you for catching live experience. It's a blast. I'm telling you. Way better than the replay sometimes. He said, Jerron said, "It makes sense." Thank you, Prince. There you go. That's what option trading is. So we spoke about one, call option. We got 3 more to go. Perfect example. Thank you. Thank you. I love your examples. You make it so easy to understand. Thank you. Thank you. See, think about it, right? I'll tell you what, people say Bill Gates said this. I don't know if he did. I never heard him say it. But they said you give a lazy person a job, he figures it out. In my case, you give a dumb person a hard job who got drive. You got to have some drive, and he'll figure out an elementary way to get around it. I'm just somebody who has a lot of drive. I mean, I have all the intel, but I got a lot of drive, and I can figure things out. He said, "Oh, okay, Tony." Okay, Tanya said, "Okay, I got it. Thank you." Courtney Rogers said, "I got it." There we go. Tony said, "Preach." Okay, I got it. Educated guesses coming from earnings, headlines, actual news, etc. Yeah. Pretty please, Netflix bullets of bear. I gotta look into Netflix. Maybe if I get some time in the show, we'll get into that. I don't want to jump all over the place. All right, young man. We'll see. All right. So the call option. We just went through what a call option is. We went through the expiration date, how to look it up, all of the good stuff with E-Trade. Now, you're saying, "Hey, Prince, that's good. I have the right to be able to buy a stock in the future." Now, what is the exact opposite of that? What is the exact opposite of a call option? Y'all guessed it. Y'all smart already. Y'all don't need me. A put option. This gives you the right to be able to sell a particular stock for a price in the future. For prime example, today, Southwest Airlines is trading at $29. You believe you go out there, you can buy a put option, give me the right to be able to sell Southwest Airlines for $25. Now today is at $29. You're buying the right to be able to sell it for $25. How is that profitable? How does that make sense? So you, and what you're going to pay, the price you pay is what they call premium. Remember, in the earlier when I said a raffle ticket, it's not called a raffle ticket. That's called premium, the money you pay. So now I can go out there. Y'all can go to me and say, hey, Prince, you got 100 shares of Southwest Airlines? I say, yes, I got 100 shares of Southwest Airlines. You say, Prince, well, give me the right to be able to sell your stock for $25. All right, you want to sell my stock for $25? Yeah, give me the right to be able to sell your Southwest Airlines stock for $25 all the way until this Friday, May 1st. And for doing that, I'm going to give you $80, right? I said, okay, cool. I take the option. When you buy it, you have bought the option to be able to sell Prince Dykes stock for Southwest Airlines stock for $25. I take your money, right? I collected your premium. Now let's say tomorrow Southwest Airlines earnings come out, the stock drops to $20. $20. You have the right to be able to buy my stock from me for 20. You have the right to be able to you can buy your stocks off the market for $20 and then turn around and sell them for $25. The exact same thing, but in the opposite way. Right? Exact same thing. That's what a put option is. This is for the bearish people. I think that stock is going to drop. I think it's going to fall through the floor. I think Netflix is not going to do whatever it's going to do, or whatever the case may be. It's going to fall through the floor. And that's what you can do. You can buy a put option, right? You can sell the contract on it. You can do whatever you want to do. Hopefully that makes sense to y'all. That's option 2. Ladies and gentlemen, we got 2 more options to go. Now, there's plenty more, but I'm not going to get into all of them, but I'm going to give y'all 4 of them, right? Now, next up, we spoke about the put option. Let me see if y'all got any questions before we get into the next one. She said, explain it to us like we're 5. Explain it to us like we're 5. Yeah? Breaking it down so I know everybody got it. So that's the put option. Now, let's go to how you execute that. Here we go, ladies and gentlemen. Just what I had showed y'all earlier, we're going to do it the backwards way. So right here, we have E-Trade, right? This is May 1st. Here's your prices. E-Trade, Apple costs more. So right here, you can buy, these are the put side of the options, right? Right now, the stock is costing $283. You can go ahead and say, you know what? I think that bad boy is going to fall off like dirt tomorrow, and it's going to go down to $70. You can go ahead and buy an option for $300. Right now, for $300, a couple $100, $500. And within one day, a person can turn $500 into $700, $600, $800. That's why people are attracted to it, right? I'm going to give y'all a little secret sauce here. Here we go. So same thing on the put side. And ladies and gentlemen, you can spread it out. You can go to 11 strike prices. You can see all the strike prices you want to do. So on the put side, give me the right to be able to sell Apple stock for $275 by May 1st. Today, that will cost you $345, right? You can see that. You can buy that. That'll cost you $345. Now, ladies and gentlemen, if you got E-Trade and you don't have option, you got to have, if you want, you got to go up here to right here where it says upgrade option level. You click on that. That's how you can upgrade from level 1 to level 2 to level 3, all the way to level 4. That's how you can get option access to your account. You go in, not everybody has this access. You got to go in right here at the top. We see Upgrade options level. If you click on that, that's how you can upgrade your options. That's the put side of the house. Y'all tracking? Y'all good to go? Look at that. Y'all smart. Young man said, I like it. Appreciate it. Kevin said, looking forward to the book. So our options considered asymmetric risks, asystematic risks. Let's see, systematic. It's kind of a tough one, right? We're talking about systematic and asystematic risks, right? That goes into the stuff of that's telling you like what risks am I exposed to? Like you have different types of risks. You got monetary risk, you got political risk, you got political policy risk, things like that. He's asking me, I can't really say. I got to sharpen up on that one and look at that one. Michael Davis said, good stuff, Michael Davis. Appreciate it. Shout out to Michael Davis. You know, I appreciate his comment. You know, he said he's been following the show here for 4 years. This is actually like, I'm coming up on 7 years in the summertime. It'll be year number 7. So, so all the people that tune in and be like, oh man, you got a great show. I've been doing it for 7 years. But thank you for tuning in. He said he's been tuning into the show for 4 years. He said he learned a lot of good stuff. So definitely appreciate that, Michael Davis. Definitely appreciate it. Now, that's the put option side of the house. Now we're going to roll into some of the strategies people utilize to benefit. Y'all ready for it? Now you're like, man, I don't know if the stock is going to go up. I don't know if the stock is going to go down. I just know it's going to move, but I don't know how it's going to move. Like somebody was in here asking, Prince, can you go with Netflix? Go with Netflix. Do you think Netflix is going to go up or down? What can I do? What I'm trying to do? After this, I'm going to give y'all a secret sauce. Number 3, Straddle. I'm telling y'all. Y'all say, hey, Prince, man, how you read those financial reports like that? How do you know options like that? I tell y'all all the time. Ever since I started drinking out of the Investor Show cup, which is in the description box, man, everything becomes so much clearer. Disclaimer, I'm just joking. I don't want nobody to say, hey, man, I got your mug, man, and I don't understand nothing off these sheets, man. I want my money back. Prince is a scam. It's just jokes. But you can get the merchandise, get the Investor Show mug in the description box. Straddle, ladies and gentlemen. Straddle. What is a straddle? This is somebody who buys a call option and a put option. They are not going to play the direction. They're going to play the movement. This is when people get smarter. Y'all notice as the level goes up, it requires a little bit more intelligence. It's smarter and smarter investing. They're like, hey, you know what? I can buy a call and just hope the God is going to go up. And if it don't go up, I'm, oh my God, I'm bad. Or I can buy a put, and if it don't go down, if it goes down, I'm a genius. If it goes up, I'm looking crazy. Right? Sometimes these stocks be bipolar. They can have great earnings, but miss on EPS or miss on whatever the case may be, and start you into a downward spiral. Right? Now, that's it. So you may say, hey, man, I'm not trying to play a direction. I just want to play movement. A straddle person is just like, I know Apple is going to move. I don't know which way Apple is going to go, but it's going to go somewhere. So what this person does is they buy a call and a put. I'm going to show you guys and girls exactly how to do that. And what happens is one side is going to be wrong, right? So let's say if I put $200 on both sides, one side is going to lose $200, but the other side may make $600, making my overall position a profit of $200. That's how option does. Like, hey, you know what? One side is going to be wrong. I'm going to lose. Got it. The call side might be wrong, but the put side is going to be right. Now, how you get burned is when you buy it and the stock barely moves, or the stock is bipolar. You don't know if it want to go up or down. If the stock doesn't move, or if the Greek symbols, you got to pay attention to those Greek symbols. I'm going to get a little bit into that on this episode. So now you get into people. Now you have things called iron condors. There's so many strategies up there. I'm going to show you how to get those. But this is a person who's not going to play the direction of the stock. They're going to play the movement of the stock. All right, y'all got that? Y'all ready to go fish? Y'all ready to go fish? I'll give it 1 second. Of course, everybody wants to go crazy on my text messages as soon as I get on live. So anyway, here we go. Y'all ready for it? Ladies and gentlemen, boys and girls, children of all ages. Here we go. How do you get a straddle, Prince? You telling me stuff. Teach me how to fish. Y'all ready to go fishing? Y'all comment and go fishing. Get your tackle box. We're going to go fish. James Cole says stocks issued by companies who issues options. We're going to get into that, James Cole. Options are issued by people. People, they are insurance policies. People who own the stock. Like I have 100 shares of Disney that's doing absolutely nothing. I want to make some money on them. How can I make some money on them, Prince? How can I make some money on my? Say if you got that Disney stock, you got that Bank of America, if you got at least have 100 shares. If you got 100 shares of a company that's just sitting there and it's not moving, a person sells insurance on them. This is insurance, ladies and gentlemen. That's why you pay a premium. All right. Tony Will said, man, you're killing me, bro. Sip on. All right. Michael said he's tuning in late, went back to the start. This lesson is very helpful. I like the new background. Appreciate that. I want to look at more students. I ain't gonna lie. Shout out to Charles Payne. I saw them on Fox Business. They had a nice bookshelf and all of the good stuff. I said, man, I could do that too. When the guys being CNBC, they do their interviews. They have, I can do a bookshelf. Right? Cool. He said, man, you're killing me. Okay, cool. All right, Ruby, hi from Memphis, Tennessee. Thank you, Miss Ruby. Yarn said, let's go fishing. All right, he's ready to go fishing. How you says, Cecily, you know, y'all can sit on the screen. She's ready to go fishing. For the people that's hearing on the podcast, I'm sorry. Tony said, let's catch the whale, bro. All right, here we go. Let's go fishing. Let's go see. Prince talking about these straddles, but nobody's showing me how to do the straddles. All right, ladies and gentlemen. Let me see how am I going to do this. Now, give me 1 second. I'm going to have to come back. So here we go right here. A straddle person is a person who's going to buy, let's say right here, let's say Apple. You know what? Somebody asked about Netflix. Let's look up Netflix just a little bit. My experience, don't do straddles on Netflix. Right? And the reason why they don't do well, I learned it from experience, not at the money strikes. I'll show you how to do that game in a little bit. Now, what a person does, they're going to come here, 420. They're going to buy a put for $700. Then they're going to buy a call for about $900. That's going to be about $1,300, right? They're going to buy a call. They're going to buy a put. And if I was let me see here. They're going to buy a call and they're going to buy a put, right? I'm going to give y'all some secret sauce here too later on for y'all new beginners. And what they're going to do is when this stock moves and goes crazy, one side is going to lose and be worthless. But you're hoping that the positive side goes up so high that you make back the money it. So let me show you how to do that. Here we go. Let me get my screen ready. So I had to turn my screen off. I'm going to turn my screen back on. I don't want y'all to rob me. I had to go hide my stuff. That's why. Sorry, y'all. Everybody ain't out here good. But anyway, so if you go to options, you get ready to trade that option, right? Let's say we was looking at Netflix, NFLZ. You're somebody, Prince, I ain't that smart, man. I don't know how to buy a straddle. How do I know to buy a straddle? Right, they make it easy for you. Hit right here. You got all these different things. You got collars, you got straddles, you can buy a call, a put, call spread, a put spread, covered call, married put, collars, collard greens, diagonal butterflies, whatever, right? We're looking at straddle. You click on straddle. Boom, look at that. It wrote the straddle right out for you. So what it's going to do, it's going to buy open one call. It's going to buy open one call, expiration May 1st at the 420 price call. And then it's going to buy a put, 420. Now you can change this around if you want to. Some people change it around or whatnot. And when a person goes down here, they're going to hit the market. And it's going to tell you how much that's going to cost. Right? So if you bought a straddle, meaning you bought a call and a put on Netflix, it's going to cost you $1,600, almost $1,700. And what you're hoping is one side is going to go to the moon and the other side is going to expire worthless. Right? Now, if the stock don't move or the Greek symbols don't line up, this could be a bad thing. But this is someone who's playing movement. They're not playing a direction. They're playing movement. Right? Here we go. So you guys and girls see that. That's the straddle. But Prince, you said you got 4. You was going to give us 4. You gave us 3. Number 1, call option. Number 2, put option. Number 3, straddle. I'm not getting into strangles and call spreads, all those things like that. What that is, that's somebody who buys different things. They're looking at expiration. We're going to get into that a little bit towards the end. I'm going to give y'all some secret sauce on number 4. Y'all ready for it? So, all right, James Cole, we'll get into some of y'all questions. James Cole says, so if you have Disney stock that pays a dividend, as an investor, you will risk it. Let me see. So if you have a Disney stock that pays a dividend, as an investor, you will risk it in a contract at a put option. So now this is what a person does. Let's say I own 100 shares of Disney. You know what, James Cole? Let's go through. I'm going to tell you, we get into the next level. The real winners in the option game are the sellers, like in anything. The seller always wins. Type that in the comment box. The seller always wins. Entrepreneurship. The person who sells wins. The person who owns the shares and sells usually wins. Right? Prince, make you say that. Y'all ready for it? Y'all ready to go fish? I'm going to show y'all how we're going to act James Cole. Let's say if you had 100 shares of Disney. We're going to walk through exactly why would you sell an option. The seller always wins. I'm telling y'all. One restriction box. Get your investor show cup. Ever since I started drinking out of this cup, everything became so much clearer. All right, so we're going to look at that. We're going to tell you, Prince, I own 100 shares of Disney. Why would I sell? Let's go fish. Let me pull it up over here. Disney. And this is going to roll us straight into number 4. All right. So you own Disney. Let's say you paid $120 for it, and it's doing nothing. You ain't doing nothing but losing money. Right now, it's $106. Disney was doing, I think it was at $140. It came out with Disney Plus. Everybody was like, Disney. Then coronavirus was like, the Undertaker came in and just choke slammed them, right? So now, here we go. Disney is down. You got this stock. You've been holding on to it. You paid $120 for it. You got 100 shares, and it's just sitting there. You're wondering, well, how can I make some money off of these shares while they're just sitting here? Yes, I'm collecting a dividend, but how else can I make money? This is going to go back to what somebody else said. Well, Prince, who's issuing Who's issuing options? I'm going to show you. So the person who owns 100 shares. Here we go. May 1st, you own Disney. It's $106, right? Let's say if you brought Disney for $110 and it's just sitting there. You're just like, man, how can I make some money? So you're like, you know what? I paid $110 for these stocks. I don't mind selling them for $111. Let me see if somebody's willing to pay for my stocks for $111. May 1st, let's look. Right now, somebody is looking, somebody will, say if you bought these stocks for $110. Say if you brought the stocks for $110, you're down on them, you're looking to make a little extra money. Right now, somebody is offering about $30 to be able to buy your stock for $111 by May 1st. So if you own 100 shares of Disney that you purchased for 110, it's down right now because it's at 106. Right now, somebody is saying, hey man, can I buy your stock for I'll give you $30 if you let me buy your stock for $111. So you're like, well, I only paid $110. So guess what? Somebody's willing to. So if they do buy them, I make $1 per share. That's $100 if they do buy them, and they're going to give me $30. So I can make $130 if somebody buy them for $111. If they buy them for $111, I make $130. Well, what if they don't buy them? I still collected $30. I can make $30 off of my stock that's doing nothing. You see that? Let me know if that makes sense. All right. Kevin said, I saw that you have Robert Kiyosaki on your show soon. Isn't he against buying stocks? Yes, and that's why I want him on the show. You don't have to agree with me. Robert Kiyosaki, y'all know he wrote the book, Rich Dad Poor Dad. He's a big real estate guy. You know, he's against Baraka stocks. He's like, hey, he's a big real estate guy. He's a multi-level marketing guy from what I can see. I want his perspective. You know, I'm not going to be like, oh, you don't like stocks? Get out of here. No, give me a perspective. Like I told you guys, I'm not loyal to any vehicle. If that vehicle is real estate, if that vehicle is stocks, if that vehicle is a business, get in the car. Right? I want to hear what he has to say. I want to hear his perspective. You're smart. Sister's smart. Said, can you paper trade on that platform? Look at you. Yeah. You know what? That's why I like my audience. Y'all are smart. Y'all beat me to the punch. But yes, I'm going to show you how to do that. I'm going to show you exactly how to do that. Hopefully I don't mess it up today. Jerron said sellers always win. That's true. What's going on, Miss Athena? Athena says it's a call and the put at the same strike price, and are the stocks with the high volatility better for the strategy? Yes, you want movement. If you are looking for movement, you want stocks that move. You want a violent one. You want somebody that's going to be moving. You don't want Coca-Cola that's going to be like whoop, whoop. No, you want somebody that's going to be like whoop, like Apple, whoop, Google, whoop. They're going to move. Now, a person at level 3, a person is playing on movement. They're not playing on a call option, put option. That's when you a buyer of a call and a put. That means that you are playing directions. Once you get into straddles and condors, you're looking for movement, right? Miss Butterscotch, she's in the building. Hey, how you doing? She said, good afternoon. Nice to see you. Glad to see you here. James Cole, not sure if it makes sense if you are maintaining a long position for your portfolio, right? If you're maintaining, what people do, they are long on Disney, but they're looking to make money while they hold a stock. Another reason why people sell options, they're looking for insurance. They're like, you know what? I got a bunch of Google. I have $100 million. I got $10 million worth of Google. And I'm wondering, what if Google goes down? If I own Google at $1,000, right? Just like with your car, you got a $20,000 car. Why are you paying $100 a month for? Why you paying? Why you buying insurance? You want insurance just in case that car goes down. So if I'm managing a portfolio that has $10 million worth of Google. I'm wondering, well, what if Google? And say if I brought Google at $1,000, right now it's at $1,200. I brought it at $1,000, it's at $1,200. I own 10 million shares. Now 10 million worth. I'm wondering, well, what if Google goes down to $500? I don't want to lose all my money. How can I protect that? So what a person does is they will sell options. They will sell put options, or they'll sell call options, right? Or they'll buy call options. They'll say, hey, let me get the right to be able to sell Google for $800. When you go to buy that put, somebody on the other end is buying insurance. That's why they call it premium. So if they're wrong and the stock doesn't go over, the stock doesn't drop, they paid a little premium. Just like every month, you driving your car around, I drive my car, I don't have a wreck. The money I paid in insurance, okay. My house don't burn down, okay, right? So that's why I look at it. His brother said, yeah, he said, yeah, I can't wait for the info on the REITs, the real estate investment trust. I'm asking Mr. Kiyosaki about that too. But yeah, he's scheduled to be on, I think, next Wednesday. Next Wednesday is Robert Kiyosaki. I think it's May 6th. And the May 4th is Pat David from Valuetainment. Pat David has the largest YouTube channel he has the largest YouTube channel, the largest entrepreneur YouTube channel, something like 3 million followers, right? He has some of everybody on his show. And he was a military guy. He's a big insurance finance guy too. So I love him to come onto the show to talk about his look on finance, all that great stuff. I think he's on May 4th. So very interesting week next week. So now, ladies and gentlemen, let's get into the fourth option. We talked about calls. We talked about puts. We talked about betting if it's going to go up with a call, betting if it's going to go down with a put. We talked about straddle when you're looking to bet on movement. Now, let's get into what makes it all work. Number 4, drum roll, covered calls. Ladies and gentlemen, this is what I was looking to do. If Southwest Airlines earnings come out tomorrow, so be it. But what I was looking to do, I was looking to do a covered call, a buy right. And what that does is I'm going to buy 100 shares of I'm going to buy 100 shares of Southwest Airlines for $29. And then I'm going to sell an option, right? I'm going to sell a buy option. So that's what a covered call is. I'm going to buy 100 shares. Then I'm going to say, hey, you can buy my share for $30 in the future for 30, and I may collect 30, 40, 50 bucks off the top, right? That's considered a covered call. So this is how it happens. If I buy Southwest Airlines for $20 and the stock shoots up to $35, and I said I want to sell them at $30, that means I made $1 per share, which is $100. Then I'm also going to profit from the person I sold the option to. So let's say if I sold him at premium for $30. So I could make $130 in one day with little to no risk. If the stock shoots up, I lose my stock at $30 for a profit. If the stock goes down, I get to keep the shares I was going to buy anyway. Plus, I get to keep the premium that I sold to the person. Does that make sense? I'll give me 1 second. I'm pulling up my next screen. I want to show y'all something. Where are you at? Okay. All right. Where are you at? Here we go. And give me 1 second. All right, I gotta get my dates together. All right, I'm pulling my next string for y'all. When did I sell that thing? Goodness. Two. All right. All right, here we go. Where we at? Where we at? Where we at? Where are we at? I'm gonna pull this up for y'all. Right? So, guys and girls, I own Bank of America. I own over 100 shares of Bank of America. Right? So, since I own Bank of America, I own 100 shares. As you guys can see, look at this. April 17th, I sold calls on it. The next week, last week, I sold calls on it again. This week, I have another call. If Bank of America doesn't get to $25 by the end of the week, I'm going to make some more money. So off of these two calls, I made $60. Right? The week before, last week, I made $30 just for I'm holding 100 shares of Bank of America. I sold a call, made $30. The week before that, sold a call, made $30. Right now, I have it in my portfolio. If Bank of America don't hit $25 by Friday, make another $30. If it does hit $25, somebody's going to buy my stock for $25 that I think I paid about $23 for. So I'm gonna make $200 just for them buying my stock on top of the. This is how people sell on the opposite end, right? So this is the back end. I have a bunch of Bank of America shares. Bank of America ain't been doing too hot lately. One, I'm collecting a dividend, but then again, I'm just selling options along the way. Make sense? Because I had brought a covered call. This is now granted. The reason why a lot of people don't sell, because it costs a lot of money to sell. I gotta have $3,000. I gotta buy 100 shares of Bank of America. That itself is gonna cost you $2,500. People don't like buying $2,500 worth of anything. People rather just get the $180, $100, $200. People are sucked into option trading because you can put a little money in and make a lot of money. That's why people like it. Wayne ain't got the money sign, okay. James Cole, are those instruments subject to capital gains? Yes, they are, right? So the thing about it is, but if you got it inside your Roth IRA, you can avoid capital gains. Because it's inside of your Roth, if you got a retirement account, if you got a Roth IRA, you can buy and sell calls, options, puts, all type of stuff, right? Because you already paid taxes on the money before it went in, and the money can grow tax-free as long as you don't take it out before you're 59 and a half. That's the way to work around the taxes. If you got a regular brokerage account, yes, I don't care about paying taxes as long as I'm making money. If I gave you $1,000, you made me $500, and you say, "Hey, Prince, can I keep 100?" And you got to pay another 100 in taxes? Cool. That was $300 I didn't have in the beginning. So I don't care about paying taxes if I'm making money. Now, if you want to avoid tax, there's a difference between what's the two words I'm looking for? Tax avoidance and tax evasion. Evading taxes is trying to deliberately, just don't pay your taxes. Versus tax avoidance, using different type of accounts. Wow. I'm making my foot, but okay. Use different type of accounts to be able to preserve capital. You know, so the options pretty risky. For buyers, they are. For sellers, not so much. A buyer with a strategy, he can do better with it. But when you are a seller, it's a little bit less risky. Like me, for prime example, ladies and gentlemen, I have Bank of America. I think Bank of America is at $23 right now. If Bank of America doesn't reach $25 by Friday, I'm going to make $30 off of some stocks that just sit in my portfolio anyway. Because I'm a seller. If Bank of America shoot up to $50 tomorrow, bad for me, because I'm going to have to sell them for $25 for a profit, just not as much profit if I would have kept it, but I'm going to sell it for a profit. But this is the way people generate income off of a portfolio that may not be moving, and this is where people protect against the downside of a particular position by utilizing options. All right? Cover calls. Those are sellers. So let's go with what we talked about today. Of course, we did the roll call, right? We did the roll call for everybody who was here. We talked about earnings. And then we talked about earnings. We talked about this is earnings season. Right here, and what you're looking at, this is the earnings season. Right now, tomorrow, we got Google is going to come out with their earnings. Probably going to be a lot of movement. AMD is going to do a lot of movement. Southwest will probably do a little movement. Tesla is coming out on Wednesday. That's going to do some movement. Boeing is going to move. Microsoft is going to move. Facebook is probably going to move. McDonald's, kind of, sort of. Amazon is going to move a good bit. Visa might make some moves. Those are companies I can just look at this chart. This is the earnings calendar. This is telling you for the rest of the week, the companies that are going to come out before the market open and after the market close. So this is earnings season. This is the season. This happens every 3 months. We are in the middle of earnings season. That's right when it's kicked off. It's going to go on probably to about another 2 weeks when we get the big boys. We went over earnings season, right? And the next thing we went over, we brought about a call option. This is somebody who want to bet that a particular security is going to go up. I think Apple is about to jump to the moon. You can buy a call option, right? Man, I think Netflix is about to fall through the floor. How can I profit? You can buy a put option. Prince, I don't know what direction it's going to go, but I know it's going to move. Now you can buy a straddle, which you're buying a call and a put. You're betting on movement. You don't know which direction. You're betting on big movement in one direction, right? That's called a straddle. Right? People don't do straddle so much. Straddles are not as the most profitable ones are call option. If you buy a call on Apple and Apple goes up 10%, good on you. If you buy a call option and if you got a straddle and Apple goes up 10%, you don't make as much money. People can make by doing this, people can make 200 to 300% in a day, overnight. Right? It's a gamble sometimes. So this is somebody who's playing directions. Then option number 4, cover calls. This is somebody who owns stocks and who's looking to sell them, or who's going to buy 100 shares and look to sell options like I was showing y'all I was doing. I was like, hey, look, I'm making $30 from this, $30 from that, as I'm keeping the stock. I got my stock, I'm collecting the dividend, and I'm selling options to make a little bit more money on my account. Y'all see that? Those are 4 options. 4 ways you can use option trading to profit during earnings season. Now, for me, for example, I don't. There are way more options you can do, iron condors and collars and all this stuff like that I didn't really go dive into, but I gave you guys enough to be dangerous. And of course, if you got an investor show mug, it definitely increases the likelihood that you're going to pick the right option. Let me stop joking because I know somebody will probably take that clip right there and then go market it and say, look, Prince telling everybody to go get a mug so they can have good options. It's just jokes, but I know I don't play on the intelligence of my audience. It's just other people out there. Some people hate you. Some people just follow you. I know some people just log in to follow, just to hit a thumbs down on every video. I don't know what they got going on in life, but bless their little heart. All right, let's see what y'all got to say. Let's see what y'all talking about. Ghost Hunter said, man, I got to have a notebook when I watch your show to take notes. You know what, man? That'll be a good thing, man. Fox Business or Yahoo or CNBC. I'm not going to lie to y'all. While I was sitting here talking to y'all, I got a text from Yahoo Finance executive producer, right? Pretty good friend over there. But They need to give me a show, man. They need to stop playing. Not now. Give me about 5 years. They put me in a show. CNBC, Yahoo Finance. Bring some flavor to the show. Put some seasoning on that meat. So you say you got to take notes. I'm glad. You know what? I'm glad when people say something like that because, you know, I'm not an entertainer, right? I'm not a singer. I'm not a dancer. I wasn't blessed to be 6'6" and jump through the roof to be a basketball player. I'm not fast. I'm not an athlete. I'm not a comedian. I'm not a good actor, right? So it's good to be able to say, hey, I can come on here and talk about education. He said, man, I got to have a notebook when I watch a show to take notes. I'm glad I'm adding value to you, your family, and I wish you the best in investing. Where can I get the calendar? Wait, did you just ask me this question earlier? Somebody just asked me where can they get this calendar? Oh, if you want that particular calendar, you go to earningswhispers. Let's go to, let me look them up. No, okay. I swore somebody asked me about a calendar earlier. And I went through how you get the calendar. But also, Wayne, who do you use for trading? Do you use TD Ameritrade? Let's look up. No, we were looking up. Yeah, Earnings Whispers. So I'll show y'all how to look up the calendar that y'all saw. Right here, I typed in, I Googled Earnings Whisper Calendar, right? You can go down here and see a bunch of them. They got a Twitter or whatever the case may be. You got a bunch you can see down here. You can go to their website, earningswhisper.com, right? Earningswhisper.com. Where's that little calendar at? It's somewhere on here. But you can see all their earnings here. You can also see what's estimated. Now, this is where you got to read financial reports. If you can read financial reports and you know how to do the math on financial reports, what we're going to talk about, you can almost make a better, it's a secret sauce here. I'll be giving y'all a little secret sauce. Here we go. So how can you tell if a company is going to beat expectations? If you do that, if we do that, right, what's going to happen? What's going to happen? You go to earningswhisper.com and you get that calendar. It's going to tell you what's going to happen. So now, if it's estimated that Google is going to have an earnings per share of 5%, you can do your math. You can know the formula for earnings per share. I don't have to talk to my head, do I? I got it written down somewhere. You can do the formulas for earnings per share, and you can see if Google is on par to beat or meet that by looking at the previous quarter, by looking at what's going on with the company. You can tell. All right, somebody said put it in the chat. There we go. All right, there you go. It's in the chat. So somebody said the calendar's looking pretty good. Tony Bone said, how does an investor capitalize on options via earning reports prior to opening or closing? Well, this is what people do. All right, Tony Bone, he already know what I'm talking about. Tony's been around. He's been following me for a while. This is how people make money overnight. Ladies and gentlemen, Google is going to announce their earnings tomorrow after the market close. So around about 2 o'clock, 3 o'clock, the market closed on the East Coast. The market closed at 1600, 4 p.m. for my non-military, 1600 for my military people. So around about 2 o'clock, 1400, you can go in and buy yourself a call, a put, or whatever, or jump on a straddle for Google. And Wednesday morning, you could be profiting. Right? you could be profiting, right? There you go. So that's what you're talking about. Or let's say if Southwest Airlines is going to come out tomorrow morning. If they're going to come out tomorrow morning, I could have brought an option before the market closed today, sell it tomorrow morning. That's not day trading. That's not day trading because the day has elapsed. On Tuesday afternoon, you can, tomorrow's Tuesday afternoon, you can get up, buy a call option on Google. I mean, not get up, but in the afternoon, right before the market closed, buy a call option on Google. Google shoots through the moon. Tomorrow morning, what can you do? You can sell it. You can sell it on Wednesday morning and can make 100, 200, 300% return on investment. That's what lured people in. John said, what about Webull? Wayne said yes. Wayne says yes. The camera looks cool. Yes, the URL is in the chat. Wayne says going to tell me everything. We got it in the chat. Ms. Butterscotch said thanks. Cicely said thanks. Wayne said thanks. Well, ladies and gentlemen, that's going to conclude today's episode. Hope y'all enjoyed it, right? We went over what season that we in. We talked about call options and direction they go. We talked about put options. We also talked about call options. We talked about put options. We talked about straddles. And we talked about buying and selling. How does this whole thing kind of work? Made it a little clear as mud. Gave y'all enough to be a little dangerous. And we talked about the common sense way of what options mean, right? So I thank y'all for tuning in. Yarn is your trade. Oh, that's the one that you use? Yarn, you use them? Or do you own that trading site? Do you own Webull? But anyway, thank y'all for tuning in. I hope y'all got some out of this episode as always. I hope that y'all learned something. I hope we went on the different ways to capitalize on the market option. What I want to do too, I'm looking at using this platform, but I want you guys and girls to be able to call in too. I'm working on how to, I used to do that with my old platform, right? Okay. I'm going to keep it, this is the real hour. I keep it real with you guys or whatnot, That company Webull has reached out to me several times to do a collaboration to partner with. That's why I asked. Webull has reached out to me several times, but it hasn't been on the terms that I'm looking to do. Right? I don't use their platform. I never use it. I don't know what it looks like, and I don't know what it looks like. So, goodness gracious, I don't think that I got what you call it. So anyway, ladies and gentlemen, I don't use that platform. Tell them to come correct if they want to play with me. They got to do correct, man. Do good business. Do good business. I don't mind doing good business with people who want to do good business. But also I want to, I have to use their platform. I got to like their platform. I got to enjoy it. And if it makes sense to me and it makes sense, then that's it. I don't take business deals where I'm the only person taking risk. Right? I like for both sides to take risk. So when somebody proposes a business deal to me, I don't want to be like, hey Prince, do this. And if it works, you make money. But if it don't work, it sucks for you. But I still win. I don't do that. It's only when I sell options. Like with me selling my options, Bank of America shoots through the moon, I profit. Bank of America don't shoot through the moon, I keep my shares anyway. But anyway, thank y'all for tuning in. Wayne, he said great information tonight. Keep up the good work. Thank y'all. I'm glad y'all like the new background that I got. And Kathy Green says, thank you. Very good show. Hope y'all enjoyed the show. Investor Show, #1 show in the world. Not on YouTube, Facebook, Instagram, but in the world. Thank y'all for tuning in. But I appreciate everybody that comes in, that tunes in, that catches the playback. If you do have to catch the playback, check us out on iHeartRadio. Check us out on iTunes, Google Play. We're everywhere. Pandora. You can get the same audio that you're hearing right here. You get it on all those platforms. On top of that, also, if you want to support the platform, you don't have to donate to the platform or anything like that. Support the Wesley Learns book series and get you the Investor Show official mug. It's the only way to read financial reports. Ever since I started drinking an Investor Show mug, boom, I've been doing so much better. Well, yeah, thank you. I hope y'all got some out of it. Tony Bones says, thank you. Miss Butterscotch says, thank you. Silver Lion says, thank you. Cicely says, thank you. Ladies and gentlemen, somebody was in here asking Prince, what do you think Netflix is going to go? You got to go do the work. What I mean by you got to go do the work, what is the estimated earnings? What was the previous earnings? Have you calculated earnings per share? I think Netflix is going to have good numbers. More people at home. I think more people I think Facebook is benefiting from social media, YouTube, Google Play. I'm benefiting from all you guys and girls being home. So online platforms are winning season for the digital people. And to that television station, you know who you are. You're probably tuning in right now. And I was saying, hey, I want to create digital content. They wanted me to do analog. They wanted me to come down, sit in the studio. Now the station is shut down due to the coronavirus. So anybody that is digital right now, I think Netflix is winning, Amazon is winning, Google is winning, because more people at home, more people on Facebook, Instagram. I don't know how many shows and streaming that I see every single day. So I think they're definitely going to win with, they can't grow more subscribers. I mean, Netflix is already big. If they're thinking about getting new subscribers, of course, that's going to decline. Competition is getting stiff. Now you got Disney coming in, you got Hulu coming in, you got everybody's almost on streaming platforms. So I don't see the user numbers looking good, but I can see their activity will probably be a rise. So I think they're going to benefit. All right, you say thank y'all. Okay, thank you. Melissa said, I appreciate you, brother. I'm learning. Thank you. I hope you say this is your first time catching me live. I hope you enjoyed it. He said, I'm throwing my chief mug away. He said, I'm throwing my chief mug away now. All right, there, Tony. Athena said, they don't have customer service numbers. They don't have customer service number, and they wouldn't approve me for option trading. I'm with TD Ameritrade. Okay, well, I got to do a video. I probably got a video showing you how to get that. Right, I got to show you how to get options to your account. If you search on my YouTube channel, it's probably on here somewhere. So if not, then I'll create one. Dana says, I'm being able to call about my money. I like being able to call. TD Ameritrade don't have a customer service. They do got customer service. TD Ameritrade got customer service. Hello, you muted yourself? Did I mute myself? He said, my mistake, somehow I muted you. Oh, my bad. You muted me. Okay. Got it. What do you think about cashless society? Definitely. We're halfway in a cashless society anyway. I don't know how many times, I mean, there's been times I left my card at home and got around just fine. So people use that to verify Bitcoin, but cryptocurrencies. But I look at that and say, well, what if the government creates their own digital currency? What if they come out with a digital dollar? We halfway there anyway. Like nobody just takes cash no more. Everybody takes, I go in places and now I'm looking at, I go do a book sign and put it on my Cash App. Daily Reverend said, I missed the show, but I catch a replay. Keep doing your thing, sir. Appreciate it. Courtney Ross, they do have customer service. They do have customer service. Marlene said, I need a mug to flow like you. Plus, my first time on your royal page, I stayed up all night and took notes. Oh, wow. Wow, that's crazy. I appreciate it. Yeah, that's the only way. Ladies and gentlemen, I'm telling you. It's the only way to watch the show. You watch the show, you got to have a mug when you watch the show. I don't know what you put in your mug. This is water. I'm not a coffee drinker. But, yeah. This one is pretty huge. My wife made this one. She had this one made. She got one with my name on it, and then she got one with the Prince of Investing and one with the Investor Show. She's so sweet, right? So, but yeah. But once I hit over 10,000 subscribers, YouTube allowed me to create a show. Not a show, but they allowed me to create a merchandise or whatnot. I thought it was cool to create a mug. Quarter said I had to call because I thought they gave me a margin loan on accident. Oh yeah, gotta watch out for that margin. Tyrone Hudson, SoCal, okay. Southern California. Definitely been down there a few times. There are stores in New York City that only take cash. When I look at stores, like they might be a little fishy. But yeah, but they're far and few between. Some people take cash. Nowadays, everything is so easy to go digital. I can send somebody $5 right now. You guys in this super chat can send me $5 right now. So I mean, I can send somebody else $5. I can go buy something. I can, this what happened to me one time. One time, I went to go. I forgot what restaurant I was. I went to a restaurant to go get something. I forgot my wallet. So what I did was I pulled up Uber Eats, ordered the food carry out, paid for it over my phone, got the food, went home. I was like, man, that's crazy. I forgot my wallet and used my phone and Uber Eats to buy the food, got the food right there in the store where I had it, and then left. Hold on, let me give you the phone number right now. Put it on speaker. So the number I got for them is 1-888-931-3867. 1-888-931-3867. Now, granted, they are getting backed up due to everybody. They got a very high call volume, but I'm not gonna lie, I like E-Trade better. Sorry, but they're good too. They're the top two big ones. Oh, she said she's talking about Webull. Yeah, Webull. Yeah, they don't. They don't what you call it. Melina. That's how you said Melina. Oh, she's talking about Webull. Okay, got it. Oh, I don't have a number for Webull. They write me all the time though. But if they want to do good business, they gotta do good business. So Ms. Buzzcott said the customer, they said because credit card companies went up in fees and the customers didn't want to pay it, neither did they. Yeah. But then again, you could be losing business. It's like me to go do a book signing. If I go do a book signing, I only take cash and people coming by with cards, I could say I prefer cash, but I would have a credit card option there as well. But not everybody walks around with cash these days. Deadly River, for real, I send 5 and my credit card info isn't involved anywhere. Cashless can work. Yes. Small businesses down for cash. Yeah. But me, even as a small business, I prefer because my books are managed by QuickBooks, right? I got QuickBooks. So if I go do a book signing and I sell some books and somebody pay me via Cash App or they pay me via PayPal, I can give a receipt right there. The money goes straight to my books. So I'm good on taxes. I'm good on everything. When you got all that cash, you got to go back. I don't like to do all that. I like to pay my taxes. I don't want Uncle Sam on me. I don't want nobody else bothering me. So when it's digital, I know exactly what I sold. I know exactly what I brought. When y'all go out there and y'all buy a book or a mug or anything, any way y'all support me by tuning in or whatever, that money goes straight into my business account. That goes straight onto my books. And then it tells me how much I owe in taxes, all of that. That's why I like digital. If you gave me $20 and somebody stole it from me, then I lost it. I ain't have time for all that. Tyrone Hudson, J. Meesh. Oh, that's sent me your way. Now I meant to say SoCal option trading call. Oh, SOLCL. I'm gonna look up there real quick. Keep doing your thing. Okay, I thought you meant SoCal that you was. I thought he was checking in from Southern California. Yeah, Jay White, that's my man right there. That's my guy. Big time supporter. He actually helped design this logo that's on this microphone. So Oh, social media. I gotta look into that one a little bit more. You know what? Let me look at it over here. Let me see if I can log in. This is gonna be the last thing I'm gonna look up today, y'all. Because we got Tyrone coming in for the first time. Let's try to look it up. I thought I was looking at his picture. I thought he was over there drinking a SoCal or something, a Southern Comfort or something. And Coke. SOCL. I thought he had misspelled SoCal, so I'm thinking, okay, let me see, where am I at? I'm looking up on my other screen, y'all. All right. Oh, that's right. SOCL. How much you put on there? All right. So you got a social media. Let's see what's in their portfolio. All right. So Mr. Tyrone Hudson came in here. He brought up SoCal, ladies and gentlemen. It's not even SoCal. SOCL. This is a social media ETF. So right here, it's going for $33. And right here, it has Facebook in it. It has Twitter. It has Snapchat. It got Spotify. It has Google in it or whatnot, right? I wonder if it had Netflix. So let's see who owns this. Now I can't see who got the majority of the shares. No assets. I want to see who owns the majority of the shares. Number of stockholders. It has 41 shares in it. 16% turnover. I'm not too crazy about that. Turnover is when they portfolio turnover is when they're buying and selling out of the portfolio. They have 41 companies in here. Let's take a look at their prospectus. I'm trying to look at the whole list. Well, I want to see what else has been held inside of this company. I wonder if they have Netflix. Well, they shouldn't have Netflix in there. But who knows? But okay, this is a social media one. So the first thing I'm going to look at this one, Tyrone, I go to charts. Let's look at a 5-year chart of this 5-year chart. Now, the blue line that you guys and girls see, the blue line is the S&P 500, which is the stock market. SoCal is SOCL is outperforming the stock market over the last 5 years, which was in a bull market. They kind of been on par and beat the market in the last 10 years. So I like that. So that would intrigue me because if you're not beating the market, I might as well invest into the market. So I do like that, but I have to look a little bit more into that one to, see what's in there. But that's not bad. Not a bad idea. Social media. You can buy call options on that. He said, yeah, because I don't travel with cash. Too dangerous. Yeah, I know. Well, I want to walk around with $300, then I lose money. So cash on hand, I put it in some pants pocket and put it in my jacket somewhere, take our switch jackets or whatnot, and forget the whole thing. Courtney says, okay. My bad. Thank you, Courtney. No problem, Athena. Okay, talking to each other. Give me 1 second. I'm gonna refresh this thing. Why can't I see the rest of the comments? All right, y'all. I'm gonna get out of here. I'm over my time. We went for an hour and 30 minutes. Hope y'all got some out of it. Hold on, let me see. Can I refresh this thing? I hate this when it does this sometimes. Prince, check that video out. What video are you talking about? What video are you talking about? Talking about Courtney Rogers. All right, ladies and gentlemen, boys and girls, children, I'm about to get out of here. Y'all have a good night. Y'all have a good day. I got some studying to do. In my new office, bookshelf, I got to read one of these books. I don't know which one to read yet. But anyway, thank y'all. I appreciate it. Until the next video, podcast, cartoon, whatever else you see me do crazy around that glow. Stroll up. Let's see what we got here. I don't see a video. What are you talking about? Stroll up and see a video. I'm missing something. I don't see a video for you. Prince, great job. Thank you. Thanks, bro. This is real good stuff. Keep it up. Monk Wade, what's going on? All right, I'm out of here, guys and girls, for the 15th time. I'll see y'all till the next time. Until the next video, podcast, cartoon, whatever else crazy you can do around the globe. Peace. Be safe. I'm out.